Hey, good morning everyone. This is Julie J. Auto Trading Strategies. I'm going to do a quick video to go over the market analyzer for the PT123 indicator and go over the column settings so you can see how to configure this for yourself and to customize it, and to understand what it is you're looking at and why do we even care what these ranges are. First, let's look at the chart below, and you can see that this is a 5-minute candlestick chart, and I've got a 60-minute PT123 indicator on it. So every 60 minutes, I'm going to get a new distribution. And the way this works is you measure the distribution from the top to the bottom. And in the middle, that is your start of where the open is. You see the open of the bar is right there on that halfback. So this allows us to measure above and below how far over the last 14 sessions, whatever you choose for your customization. You can change that to 20 or 50 or 100 or whatever for your period settings that you want. I keep it on 14 just because the algos, like I've talked about before, you've got your RSI, you've got your stochastics, you've got your ATR, you've got, I mean, so many, your CCI. Algos are pretty much creatures of, normal. So the normal distribution is just 14, but if you'd like to customize it, you can. So if you'd like a 10 period, or if you'd like a 20 period, or a 13 period, or 21, you can change that. But so what you're getting is from the open of the bar, a where's my arrow line right here? So from the bar open, we're going to get an indication that there's going to be 32.75 potential profit for the end of the line for that 60-minute candlestick. So if we get to the top or to the bottom, we're going to stop chasing price, right? We're going to stop chasing our opportunities. We're going to take our profits. Or conversely, if we're in an uptrend, turn this guy around. If we're in an uptrend, the best place to buy is cheap, right? Buy low. So when you get an opening candle, here's your distribution for your 60-minute, here's your market open, it gets down to the bottom of that 60-minute distribution, and you're kind of biased long for the day. You're not listening to the COT report. You're not listening to them telling you that everybody's stacked short. You're watching your monitor and you're seeing it's green. You might want to take a one contract or something and, snag it. But these distributions, and then of course, where would you take it? You would take it to the top. That's your coast to coast. And then you may want to wait, take your profits, you take your, if you're day trading, take your profits off the table and wait for that opportunity to come back. But let me say this. There is a fantastic way to swing trade this, and that is to measure from the 1 to the 3 and put this below the 3, the PT3, and that's your trail. You can either do all 3 of them, or you can just literally take 2 of them, just the 2 to the 3, and use that as your trail. And that works most of the time. So you can know that you're still imbalanced. There's no fat tail. markets are just normally working, right? And that way you can hold a price longer than day traders. So, and if you go back and forth and look at your screen, you'll see that very few um, fat tails occur. And when they do, they correct themselves. So if I were to take my measurement right here, and put it on here, you'll see that that first candle was exactly that. You see how the algos stop? I mean, it's like they know exactly where these ranges are. And then it came back and stopped them out anyway. So you would have gotten a stop out here. But if you measured from the middle to the end, your full 1, 2, 3, you would not have gotten stopped out. Look at that. It's just more risk. So if you measure from the 1, 2, 3, the PT3 above or below the PT3 will usually keep you in a trade. I mean, I'm just saying, go back and look at this and do your back testing. So here's another instance of this fat tail, and here's from 2 to 3. It looks like it's going to be the, sorry, these graphics. See that? So you can have fun. Let me put the Fibonacci on this and just so that we can see it. See how the open of the distribution contained the price too? And then if you measure from the distribution to the PT3 and run that as your risk, looky there. And that is if you wanted to, keep a long. But this one was clearly a fat tail. And when that happens, I think I've gone through this with you before, you can measure the entire range. That's 2 times your range, because 1 time, 2 times above and below. So there, look at that, to the tick. Do you see that, guys? Do you see? I mean, do you see how this works? This is like algorithm. Anyway, um, so that's what you're looking at. This is a 60-minute distribution, and when a market is running normally, here was overnight session, you see that the algos just keep it inside the ones, and then you get outside that area, and it's a good, good place to get long or short. But and here you can have it on your monitor to see how much you want to take from the open of that bar to the end of your range for that 60-minute period. So if you're trading a 5-minute candle, you can say that there's going to be 23 points of profit or 32 points of profit, depending upon if you're trading to the 2 or 3. And how can I get inside that to capture that range going in my direction? So another way to measure this is to graduate up to the 1 hour initial balance and select the PT 1, 2, 3 for the range of the 1 hour initial balance. And again, you can use it either on the close or the open to take your measurements from. So if you put it on the close, I'm going to show you this. It's going to blow your mind. And let me hide my 60-minute distribution. You can see that we opened on the line, and finally it broke out, came back and checked it, went up to the 1, went up to the 2, and then went up to the 3. So if you know what you're looking for, and how the algos trade in and out of these ranges, and understand your range calculations right here in front of you, you can get into the weeds much greater with your trading strategies. Now this can be changed to get calculations off the open also. So because look at this, you've got an opening range, like an open of the bar, and then you've also got a close. So if I were to take a bar of that you can open and close your sessions the same way that you can a bar. So I was, talking to Adrian about this when I was giving him all the instructions of what I was trying to achieve with this, and he did such an amazing job. He first gave me all the calculations off the close, because that's what they're normally used to doing. And I'm like, no, 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 Adrian. I want to be able to do both the open and the close, because off the open, I want to know that difference and arbitrage it from that close. So you see, when we opened prior to that, we were on the PT3, but we've got a new distribution off the open and running the session from the open, and same thing, new profit targets, but you can get to them faster off the open and easier. I think the open targets are easier to get to, especially during the morning session. So just know that you've got two different options to customize your, and you can daisy chain this. I like to put the open on a dot. So I've loaded a template. I've just changed it to dots, so I can tell the difference. And okay, and then that way when I put the IB123, I mean, excuse me, the yeah, off the close, the IB off the close, I can put that on top of it, and oh, there it is. This is what I did wrong. I can see both, and I definitely want both the open and the close to be on my chart. So there's the close, and there's the open. So there you go. That's what I like to look at. And look, once you understand what it is, so I went right to the 1, came back, and then went right back to the 1 again. So you got your when I said you get to them faster off the open, you get to your target faster and then you get to your close. So the open is before the close. So you can run two different targets, but you don't have to do it like I'm doing it. You can just use the close. I think most of the algos are just running off of the close, but I like to have a little bit of a edge, so I'm running it both ways. And I can look at two different targets to trade to. So this is that 1 hour initial balance. You can do the same thing for your RTH period. So now that you understand all that complexity, the reason I bring it up is because you have to make these decisions for your columns and your market analyzer. You have to decide whether you're going to run the numbers that you see in the market analyzer off the close or the open, because it does make a difference in the calculations. And I've thought about this many times, and I'm thinking that we want to keep the market analyzer on the close, and that way when we're live market sessions trading off, and we're outside that range, it would be easier to identify what that range is that the algos are normally used to seeing off of the close. So that's why I want the close signals to be on my market analyzer, but you can change that to the open if you want. So let's just take a look at these settings real quick. I've got the RTH PT123. So in your settings, I've got 14 period off the close. I'm going to use the time range, and I set the time 8:30 to 15:15 for the indicator. I've selected the JATS PT2. That's not the PT3, that's the PT2. So go down here to your JATS indicators and then choose the PT2, and then you can check your plot, PT1, 2, or 3. So there's your 1. And then I just put a 1 minute candle on here because I'm using, this is important, the instrument settings. I've got my time range up here, the 8:30 to 15:15, inside the total trading hours. Use instrument settings. I've got a 50 sessions, go back 50 days for to load data to get this. And then I'm calculating on each tick. I'm not waiting for the session to close. Label it PT1, RTH PT1. Color for background dim gray, color for foreground white, and that will give you your calculations for your PT1. Same for PT2. You just have to create a new indicator. So you would add an indicator to your chart. Go down and select the indicator is the PT2, change it to the PT2, change it to the close 8:30 to 15:15, minute 1, 50 days, label it, and dim gray white, and that is the same for the 3, PT123. IBPT1, same thing. You want, this time though, instead of the trading hours, we're going to use the 1 hour IB template that I've sent you because I'm doing my session template that way for that first hour. And this time the minute is going to be changed to 60. And label it PT1. Now I've got a little bit different color for the foreground, or the background rather, because I want to have that stand out when I'm looking at my chart. Off the open, I'm going to see that I have about 100 points of opportunity off the open to go long or short. So I'm always, wanting to see what that is and have it stand out on this monitor. But if that bothers you, you can just put it back to dim gray. And that's that. For IBPT2, same thing, you want to leave it on the same settings as your PT1. We're going to be pulling off of our trading hour template that you've loaded to your trading hour template folder in NinjaTrader, that 1 hour IB, label it 60 minutes, plot the PT2, label it PT2, and then for the PT3, same thing except for we're taking the PT3 uh, settings from our PT2 indicator. Now we switch over on the 60-minute bar. Same thing, the PT2 indicator to get our calculations. We're going to do the 60-minute PTO PT1, but this time we're going to be using a 60-minute session. We're not choosing up here. We're just going to change our value to 60, and same thing, label this time dim gray and white. PT2, same thing. $60-minute, and PT3 make sure you choose the PT3. So we had the PT2, 1, 2, 3. Yep. Then for the 15-minute, change your value to 15. And for the 15-minute, I don't need 50 days. But if we want to make them all consistent, you can do so. It's just that I'm using 15, 5, and 1. You only need 30 days of data. You don't need the full 50. And because we're running it on each tick, just to make sure the performance stays nice for me. And then the same thing, you just do PT 1, 2, and 3. So the value of me providing you a template is I've done all this work. You don't have to sit here and set all this up. You should be able to use my template. And 5-minute and 1-minute. If you would rather have a 30-minute and not a 1-minute, you can come in here and change this to a 30-minute. In fact, why don't we just do that right now? Change it to a 30-minute. Oops. Change your label. Okay. So I've got my 30-minute 1, 2, 3, and so then you can just come back in here and move it up. There we go. So now I have my 60, 30, 15, 5. That's probably a better template anyway. And now we've got what the profile traders are looking at for that 30-minute. And there it is. So let me, there's your template. So let me right click, go to templates, save as, and I'm going to name it the PT3 123 Market Analyzer. And you can add other components to this. That if you want, you can put, I had cumulative delta on here, and I had a arbitrage between the one or the 200 EMA on the RTH and the 200 EMA on the ETH time frame, the Globex versus the RTH, so that I could see where price was between, my price oscillator, um, between the 200 EMA and price on both the RTH and the ETH time period, especially for those lower time frame charts, um, to give me an extra, hand on where the bias of price is going. And if there's only one thing I can tell you about why you're interested in this system, it's like you're at the open, here's your open, and you're thinking to yourself, what are my opportunities for the day? I'm sitting here at the very top of the closed range, and if you're stupid like me and listen to the bias of other people that are telling you that, or telling me that, the market is going to sell off because the COT report says so, all the hedge funds are stacked short, it gets into your mind and you start believing it and you start, making mistakes. But clearly, Price was not listening to the COT report. You've got to just follow Price on your monitor and do the best you can. If you get into a period of sideways chop, um, you know, find these levels and use them. Um, don't get inside the weeds on a tick for tick like I had been doing also. So widen your range out a little bit and tuck yourself outside that range. And I think probably the best intraday trading would be using that 60-minute candle on top of this 60-minute range. So let's put this back on here and choose a 60-minute. Put lines on here so that we can see the difference. Here. There we go. So now we've got everything we want to see, and it gets real busy, but as long as you know that this is the end of the line and you are inclined to get long, that would be your, sweet spot. Anytime you see these wicks, rejecting at these lower levels in an uptrend, that's where you want to be. If you're in a downtrend, opposite, you want to be on those top boxes coming back down. That's where you would want to get, short. So use this judiciously. I mean, it's not a trading system per se, like Profile is. You just have to understand what it is you're looking at, and see how the algos flow in and out of these ranges. You want to know, are you inside the range or are you outside the range? If you're outside the range, you're in a fat tail for that distribution period. And you can do several things for that. If it's early in the session and you're in a fat tail outside the range, that would lead to a range expansion, right? Outside the range. And sometimes, let me take everything off the chart so we can see it and just put the 60-minute back up. Sometimes price will get outside the 60-minute and break out and run right here. So that's a good key of that range expansion that I'm talking about. So here we came back and cleared all those stops. But most of the time it's going to stay inside your range. So here we had that breakout. Hmm. Well, I'm sorry that it intrigued me. I was trying to see if I could catch them where they were taking that. But so anyway, I hope that helps. 60-minute daytime trading is a really good template if you're a day trader. Otherwise, do what I do and graduate to those initial balance ranges to give yourself more of a indication of how far it can go. You get in the car, it's like, how far can I go? And then watch the algos run to that level and then just stop trading because you're done for the day. And if you can give yourself targets that are, it's like setting a goal for yourself. If you can get the direction right, you know, you can see where that target line is and then just relax. You're not worried about anything else. You're just waiting for the target to get hit and try to minimize your risk. So that's what the name of the game is, to preserve your risk capital so that you can, you know, find the opportunities and know where the algos are likely to go. It's all a game of probabilities. Okay. Thank you so much, and I hope this helped as far as setting up the PT123 market analyzer. Talk to you guys soon. Thank you.